Have you ever thought about being your own bank? Intriguing, right? Today we're going to explore this exciting concept. Imagine having a private vault, a financial haven where you can store your wealth, borrow from it, and still watch it grow. This isn't an illusion, but a reality made possible through a strategy that employs whole life insurance as a personal bank. By adopting this approach, you open up a world of possibilities. You gain control over your finances, enjoy tax advantages, and have the freedom to dictate the terms of your loan. All this while your policy amount remains undisturbed and continues to earn interest. Quite an interesting twist on traditional banking, isn't it? But how does one go about setting up their own bank with whole life insurance? What's the step-by-step process? We'll be answering these questions and more in the next scenes. So stay tuned as we delve into the process of becoming your own bank using whole life insurance. Before we start, let's make sure we understand what whole life insurance is. Whole life insurance, in essence, is a type of permanent life insurance that offers coverage for the entire lifetime of the policyholder. Unlike term life insurance, which covers you for a specific period, whole life insurance doesn't expire as long as premiums are paid. But there's more to it than just lifelong coverage. One of the unique features of whole life insurance is that it accumulates cash value over time. This is essentially a savings account within your policy that grows, tax-deferred, each year you hold the policy. Now here's the magic part. This cash value can be borrowed against. That's right, you can take out a loan from your own insurance policy. And the best part? The money you borrow does not decrease the policy amount and it continues to collect interest on your behalf. With the basics out of the way, we can now dive into the step-by-step process. Now let's explore how to become your own bank with whole life insurance. Imagine this. You're not just a policyholder, but a bank unto yourself. Intriguing, isn't it? Let's break down how this can be achieved. First off, the journey begins with buying a whole life insurance policy. This isn't your typical term insurance policy that only pays out if you pass away during the term. No, whole life insurance is a policy that stays with you for your entire life and has an added perk, a cash value component. Your cash value is like a savings account within your policy. Each time you pay your premium, part of it goes towards the death benefit, the amount that will be paid out when you pass away, and part of it goes towards building this cash value. The magic starts when this cash value begins to grow, and grow it does, thanks to the interest it earns over time. But the real wonder happens when you realize that you can borrow against this cash value. Now, you might be thinking, but won't borrowing decrease my policy amount? Well, here's the beauty of it. It doesn't. When you borrow against your policy, you're essentially borrowing your own money. The insurance company gives you a loan equivalent to the cash value you've accumulated, and your policy continues as is, still earning interest as if the money was never touched. This loan doesn't have the stringent requirements of a bank loan. There are no credit checks or lengthy approval processes. And the repayment terms, those are flexible too. You can pay it back at your own pace, with the interest going back into your policy, not to the insurance company. So you're not just securing your family's financial future with a death benefit, but you're also creating a financial tool that can come in handy during your lifetime. And there you have it, a step-by-step guide to becoming your own bank with whole life insurance. We've covered a lot today, so let's recap the key points. We've explored the fascinating concept of becoming your own bank by using whole life insurance. By putting money into your policy, you're not just ensuring a safety net for the future, but also creating a personal bank for yourself. This unique approach allows you to borrow against your policy. And here's the real kicker. The amount you borrow does not decrease the value of your policy. Your policy continues to grow and collect interest, even as you borrow against it. It's like having your cake and eating it too. This strategy opens up a world of possibilities. It gives you the flexibility to manage your finances on your terms, and the potential benefits could be tremendous. Imagine the peace of mind that comes with knowing you're in control of your financial future. Remember, with whole life insurance, you can potentially be your own bank. It's an exciting concept that could revolutionize your financial strategy.